Have we finally got some great news for first home buyers? Are you finally, even though it's been really difficult to get in the market, almost impossible, has in the last 24, 48 hours has a policy change happened that now allows you to go and buy your dream home? Well, let's find out right now. Finally, have we got some good information for first home buyers out there? Anyone that's interested in this type of information, we've got some links down below to our YouTube channel. Follow us on social media. Get onto our YouTube channel, subscribe. We'll get all of the updates as we're going through anything that's relevant to property, whether it be statistics, whether it be policies, and also tips and tricks how to really get the most out of the properties that you already have. It's on that YouTube channel, which is FNIP TV at YouTube there. And obviously we do some other updates through Facebook Live. Anyway, so that said, now we have some information out yesterday for first home buyers. Scott Morrison, at the Prime Minister at this Liberal Party event, basically came out and mentioned they have a new policy for first home buyers. No, it's not a giveaway. It's not cash. It's not a building bonus. It's not a first home buyer's grant or anything like that whatsoever. This is a completely new policy, and it's basically directed at the amount of deposit that people need to get approved, I guess, from the bank. Okay, so at the moment, as it stands, the banks assess people when they're going for a loan in two separate ways. They've got DSR, which is basically debt servicing ratio. So can you afford it? Are you earning enough money? Are you saving enough? Or are you blowing it every week at the TAB? They're going to notice that. They're going to see that and see whether you service. That's still going to apply. Where this does kick in is that in LVR. So for example, if we're going to go and buy a property at say 500,000, I'm going to use this as an example because it's easy numbers for me to explain on the fly. To get to a normal loan without lender's mortgage insurance, which I'll explain what that is in a second, you would normally have to have a 20% deposit. So you need to put 100 grand down, and then basically the rate that you pay is all that you pay. Obviously your stamp duty, etc., or whatever savings apply given the state that you're in for being a first home buyer. Now, in this new proposal, let's just go back there for a second. Lender's mortgage insurance, what is that? Lender's mortgage insurance is something that people avoid like the plague. Sometimes it's good to avoid it. Sometimes it's probably not a good thing to avoid lender's mortgage insurance. But what the main thing comes down to is lender's mortgage insurance is what a policy that the bank takes out makes you pay for. And what it does is it insures the bank, once you get above 80%, the rate goes higher as you go higher up in the amount that you're borrowing versus the amount you're putting in. It insures the bank risk against loss. Okay, it doesn't cover you in case things go bad. It's for if things go bad, the bank's insuring their loss based on the money that they put out there. So if we go out and get a loan that's and we've only got a 10% deposit in there, we're going to be paying lender's mortgage insurance, and that's going to range between 2 to 3% of the loan's actual value. So we're going to be sort of 15 grand in terms of lender's mortgage insurance in that exact scenario. And then really, to be honest, there's not a lot of banks out there that are looking at you if you've got a 5% deposit, if any, at the moment. But what the banks come out, the government's come out and said is that they want to put in an act, put together a policy that helps first home buyers in this regard. They want to be the one that's covering the cost of effectively the mortgage insurance, because they're going to back the loans themselves, for people to a maximum lend of 95% LVR. So that means that if you're on your way to be saving for, say, a 10% deposit, and you're at 6% right now with you and your partner, then potentially you can go out now and qualify and get a loan and not have to fork out the 10 grand or whatever it is for the lender's mortgage insurance, because the government's going to back that part of the loan. Now that said, there are a few caveats on this. So something that we identified there was that in the last year in 2018, apparently there were 100,000 first home buyer transactions of property. This policy is only going to apply to the first 10,000 in a given year. We'll successfully guess this. Once it's been taken up, that's been taken up for the year, and it's going to go on from there. The other thing as well is that you need to qualify for being an actual first home buyer. So that means that you can't have owned a property in the past. You can't have an investment property. This really has to truly be your first home buyer. There's also some income levels that they're covering on this policy as well. So I think it's 125,000 is what? Yeah, sorry. Income threshold for a single is 120,000, and then the income threshold for couples will be $200,000. And as I said, mentioned before, they've got $500 million that they're going to allocate towards this. So it's going to apply to the first 10,000 loans on a first come, first served basis. The situation with this at the moment, a couple of other, a few other experts and things like that have come out and said that this policy makes good sense. It's not going to have a massive effect on housing prices in that pushing them up or anything like that, because it is capped at a certain level and limit. But it does still require people to have saved, a significant deposit, which I think personally is a good thing. I don't think we really should be placing a lot more emphasis on saving and obviously preparing for people's future and actually making sacrifices to get into a property. It's not meant to be given away. It's meant to be something that you work for. A couple of things on this to think about is that what we're going to be doing in this situation when they guarantee these loans is that effectively when someone starts their lending their process, they're going to have borrowed 95% of the property's value, because this isn't a giveaway. This is just the lender's mortgage insurance you may not have to pay, but you still have to pay interest on 95% of the property's value, which is what you've borrowed. Now, if we were thinking about that for a second, depending on which market that you were to buy into at the moment for that type of thing, some of the markets, some people are saying, and I would agree in some markets, that the market is going to continue to go backwards. So if that goes back 5%, you're going to be in a situation where you've now lost your deposit and you're in some form of negative, potentially negative equity scenario, particularly when you take into account the selling costs if you were to get out of your property, which is also something that the people need to factor in. And having a big deposit into something, can be a good thing in terms of a principal place of residence, because it gives you a buffer there for when properties fluctuate in case that you're wanting to sell. The other thing that's interesting with this, and what the government's also mentioned today, is that they have an existing first home super saver scheme, and that is a scheme which I'll do another video on that basically explains the ins and outs of that, which basically will explain how that all works. But you're going to be able to use this new policy in conjunction with any deposit monies that you've been able to save under that scheme, which I thought was really, really good, because if you've managed to dedicate the funds and put them aside, then great, you can benefit on this new scheme as well. A little bit more on the detail about this scheme was that they were talking, mentioned as well, was that the rate, how much are we going to be able to get? Is it going to be capped? They're setting up a specific body that's going to basically run this, talk to lenders, non-bank lenders and everything, to sort of get them on board with doing this type of lending. And that body is actually going to determine how much you can qualify for in a given area. So I've seen some articles this morning that have talked about, that means you're going to get more in Sydney and more in Melbourne than you will in other areas in terms of assistance and support as a dollar value. Which may well be the case. I don't see any detail yet that definitively tells me whether that's going to be the case or not. I guess the thing to sort of think about is, and maybe this is what they're thinking, we've always talked about, and the government has, about how everyone's wanting to move to the major cities and they're not wanting to move to regional centres and things like that. And this policy that they're talking about, where they can actually manipulate the amount of assistance that they're going to give people getting into a property, in the future, if used correctly, could be a terrific policy tool to be able to create people to want to move to other regions of Australia that are supported by industry. And obviously maybe if there's infrastructure or new employment opportunities or manufacturing bases that are going into those areas, this can be a nice passive way that, the government can, obviously make it make it seem attractive to move to those locations because of the amount of assistance in terms of what property price you could buy into in that market using this tool. So to me, that's pretty interesting. This policy obviously is going to definitely be attractive to first home buyers out there. I think that if you are in that situation, obviously it's a good policy for you. Obviously, just be careful. Just obviously understand that it is getting into up to 95% debt against the property that you're purchasing. So that does come with weaknesses. But like we know with property, we've got cycles and all of those different sorts of things that. Obviously, if it's your own home and you're going to live there and you're going to be there for a decade or more, then you're probably going to be okay. But just something to think about when you're going into this process. This is a lot of the stuff that we talk about at our finance and investment property masterclass events that we hold as First National Real Estate National Investments and projects around the country. I've got some links down below as into registering for these events. We cover on these nights these types of things, what's happening in the election, finance, property 101, problems with property, how to overcome them. And it's perfect for people who are just getting into property investment or those that are actually experienced property investors, got a portfolio, and they're just trying to optimize and make things work out. But I've got all the links to our events coming up there. There's 26 coming up around Australia. Please, we'd love to see you there. There's nothing to buy. It's free. There's no courses for 10 grand to sign up to. There's no properties for sale. If you want to sit in an environment, be entertained, be catered, and we have food and drinks and everything like that, which is really nice. Come along. We've been doing it for years. We've had thousands, probably tens of thousands of people at this point through our events, and we've helped hundreds, if not thousands of people go from being where they are today to successfully getting into property and obviously looking at ways of avoiding all of the pitfalls and getting in there. So if you'd like to come along, we'd love to have you there. My name's Richard Waldron, and I'll see you next time. Bye for now.